Hey everyone, we have completed the year 2024 and it has been quite an eventful year. We had elections in both India and US along with rising geopolitical conflicts, beginning of interest cut cycle in US and massive selling by FIs from Indian stock market. If we closely look at market performance, the first half of 2024 was brilliant, where the large cap index generated around 10% return, mid cap index was up 26% and small cap index generated 23% return. However, in the second half, the situation got a bit tricky with Indian economy witnessing a slowdown in growth. It also got reflected in Q1 and Q2 results of FY25. On the other hand, because of the sharp rally in 2023 and the first half of 2024, valuations became expensive. As a result, in the second half, the market witnessed correction and consolidation where Nifty large cap index remained flat in the second half of 2024. Likewise, the mid cap index remained flat and small cap was slightly up. Here the big question is, what is the expectation from 2025? And what should be the investment strategy for 2025? That's where in this video, I'll share my thought process on what can be expected in 2025 and how should you plan your investment in 2025. Alright, let's get started. So in my opinion, there are two very important events that would set the direction for the market in 2025. First key event is the geopolitical situation. In my opinion, 2025 could witness a very volatile geopolitical environment. And these geopolitical situations would impact every country in the world, including India. Mr. Trump would take over the US administration by 28th January and he has announced a 25% tariff on Mexico and Canadian import along with a 10% additional tariff on Chinese imports. Now, I was going through some reports that mentioned that in 2023, US imported $1.5 trillion worth of goods and services from China, Mexico and Canada combined. If Trump puts high tariff, it can result in a big trade war. Please note that US and China are already having a trade war for a long time. Although Indian export sector should be a beneficiary from this event, that includes sectors like IT, pharma and textile. So worth keeping a close eye on these sectors. Apart from this, Mr. Trump has also announced reduction in personal income tax and corporate tax that can increase consumption in US economy and corporate capex. Trump's victory has already resulted in USD getting stronger against other currency. Plus, US Fed has highlighted that there might be lower rate cuts in 2025 due to elevated inflation. So both stronger USD and lower rate cuts would result in delay in rate cuts from RBI. The strong USD would continue to result in FIs outflow from the Indian market, or at least they won't invest in the near term. So the first event that would be very crucial for the global economy as well as the Indian economy is the geopolitical situation. Second crucial event for the Indian economy is the earning growth. Indian corporate earnings have witnessed slowdown after a long time since COVID. Q1 and Q2 of FY25 witnessed slowdown in growth and it is expected that Q3 would also remain tepid. And if we compare the earning growth with valuation, Nifty large cap index is trading at a P of around 22 and the median P for large cap index for 10 years is around 20. Please note that we are considering TRI, that is total return index. So the large cap index is trading at around 10% premium to historical median valuation. However, the challenge is with mid and small cap which is trading at much higher valuation where Nifty mid cap P is around 32. Here please note that Screener and other platforms are showing mid cap PE as 42, but that's because of 25% jump in PE due to addition of Vodafone Idea after index rebalancing. Since Vodafone is in massive losses, it resulted in fall in mid cap index EPS and resulted in sharp jump in PE ratio. Excluding this, Nifty mid cap index PE is around 34, which is much higher as compared to its historical PE of 27. Whereas Nifty small cap index is also trading at a PE of 34 against the median PE of around 29-30. So overall the valuation comfort is not there in the Indian market. Especially mid and small cap index are trading at very high premium. And if this earning downgrade continues in Q3, it can result in further correction and consolidation in the Indian market. Considering these factors, I won't be surprised if in the first half of 2025, large cap index remain muted, whereas the broader market can witness a healthier correction. Now the big question is how to plan investment strategy for 2025. Let's discuss it. Before you make a financial plan for 2025, I would suggest you to relook at your financial condition. This assessment basically includes a quick review of your current state of assets and liability. So list down all your investments across mutual funds, stocks, FD, etc. along with percentage allocation in each asset class and how much returns you have made. Also list down your EMIs, loans, etc. This would give you a clear picture in terms of where do you stand as of today. so that you can plan your 2025 financials accordingly. Then you should list down your income and expenses so that you know how much money you can save and invest in 2025. And then revisit all your financial goals across short term, mid term, and long term. Next, very important aspect of financial planning for 2025 is to ensure risk management, if not done already. Here, first thing you need to do is build an emergency fund that should have 6 to 9 months of your monthly expenses. And keep this money in safer investment options like FD or debt mutual fund. This would help you during rainy days, and make sure that you don't touch this money unless there's an emergency. Second, ensure that you have a term plan, because in case anything happens to you, your family should live a financially comfortable life. And third, ensure that you have a health insurance, because healthcare cost in India is rising at a very fast rate. Just a few days of hospitalization can wipe out all your savings and investments. Hence, a right health plan would ensure that you can get the best medical treatment without worrying about the medical expenses. Now, in case you are not sure how to shortlist a right term plan and health plan, I would highly recommend setting up a free 30-minute call with Ditto advisors. It is one of the best insurance platforms where you get honest advice without any spam calls or message. Ditto team helps you break those complex jargons in layman language and help you identify what parameters you should look for while shortlisting a term plan and health plan. Especially health insurance selection is a little trickier. You need to look at various factors like claim settlement ratio should be higher than 90%, then there should not be a co-payment clause or room rent capping. It's good to have no claim bonus, restoration benefit, etc. Also, every person has different requirement, and that's where Ditto team understand your specific requirement and helps you shortlist the right term plan and health plan for your family. Not only that, the team also help with claim settlement. In fact, you can also compare various health plans and term plans on their platform. Ditto enjoys a 4.9 rating on Google out of 5, and there are 11,000 plus ratings. That itself speaks everything about them. You can visit their website, click on book a free call, select term or health plan, select date and time slot, and click on confirm. Just enter a few details and click on confirm booking. I would anyways provide the link in the description and the pinned comment. Now, once you take care of your risk management, next step is to relook at your investment portfolio. Last few years after COVID have been amazing for Indian equity market, and within that, mid and small cap index have outperformed large cap by a big margin. There are two reasons. First, mid and small cap stocks fell down significantly during 2018 to 20 period. So their valuations were very attractive. And second, post-COVID, our economy has witnessed a very strong growth, and mid and small cap companies have grown their earnings at much faster rate. However, as we enter into 2025, valuations are quite stretched for broader market. So it's very important to rebalance your portfolio. If you have higher allocation in equity, then you can consider reallocating some money in debt mutual funds, then bonds, gold, or fixed income instruments like FD. As discussed earlier, the first half of 2025 can witness correction and consolidation and should provide a good investment opportunity. So it's worth sitting on some cash on the table. And if you have made good profits in stocks, it's worth booking some profit, especially in stocks where valuations are stretched. Overall, I would say you can consider having around 20% cash that can be deployed in case of correction. Having said this, don't stop your SIPs in mutual funds. So if you are a salaried person and get a fixed income to invest, keep investing it systematically in SIP mode, because it's very difficult to time the market. Next, I would suggest rebalancing your investment across large, mid and small cap. Because of massive rally in the past, a lot of retail investors have ended up having very high allocation in mid and small cap. But going into 2025, I would suggest reallocating a good portion of your money into large caps. For example, you can consider keeping around 50 to 60% in large caps and remaining 40-50% in mid and small cap. Also ensure that you diversify your money across sectors. Don't get carried away with hype across a few specific sectors. Ensure that you look at broader themes like consumption, healthcare, digitization, sustainability, financialization, and keep a fine balance across these themes. And before we close this video, remember that Indian economy has a very bright future ahead. Yes, there can be some temporary blips due to slowdown in earning growth and stressed valuation, but any correction in 2025 will only create buying opportunity for long-term wealth creation. In fact, correction always provide opportunity to deploy money at good valuation, provided you invest in right companies. But for that, you need a lot of patience and conviction. So in this video, we discuss the key events that would shape the growth of Indian economy and stock market in 2025 and how you can plan your financials for 2025. Considering the geopolitical instability and slowdown in earning growth coupled with high valuation for Indian stock market, especially broader market, I won't be surprised if in the first half of 2025, large cap index remain muted, whereas broader market can witness a healthier correction. So it's good to relook at your investment portfolio in 2025 and rebalance it with more weightage towards large cap. Also, it's good to keep some 20% cash in hand to invest in case of correction. Having said this, there's no need to panic. It's important to keep an eye on long-term growth story. Indian economy is bound to outperform in the long term. Also, if you need help in selecting the right term plan and health plan, you can set up a free 30-minute call with Ditto team. I provided the link in the pinned comment. Now tell me in the comments, what is your strategy for 2025? Do you expect correction ahead? And how much cash are you sitting on? If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.